Welcome to the course. Welcome to the Nasdaq 100 and US30 trading course, presented by me, your host, Stan. In this course, you're going to learn a great deal about Nasdaq 100 and US30. Bear in mind, these indices are pretty much the same, but the setups vary at certain points. But just know one thing, I'm going to give you one step-by-step method in order to trade these markets successfully. It's known, even though it's a lie, that the markets change every single day, so you need to adjust your strategy. But this thing that everyone quote unquote knows is actually a lie. There are 5 specific times that we will be trading at that I'll share with you. And at the end of this course, I believe that you will know everything that you need to know, and you'll be able to trade confidently in the markets with this professional Nasdaq 100 and US30 strategy that has given me profits over the past 2 years. So bear in mind, this course will give you a great deal of confidence and fearlessness when it comes to approaching the markets. So stay tuned, and we'll go into the first lecture. Welcome to the next video. This is module number 1, or lecture or lesson number 1, and this is the introduction. We can't lie to each other, and I can't lie to you. I have to go through an introduction. I can't just go straight into the course. So I want to give you a brief overview of what you're going to be getting yourself into when we go into the next slide. Because at the end of the day, you need to know every single thing that there is about Nasdaq and US30, at least the way that I trade it. So let's move on to the next slide. The goal of this course. The goal of this course, as I've highlighted in a previous video, is getting you to a point where you are able to enter the markets at these 5 trading times that I'll introduce to you later on, and trade professionally and successfully with minimal risk and minimal time dedicated to the markets. Because as we know, a lot of people go onto the market and just watch the market move up and down, sideways, up and down for hours before they see a setup. But with this strategy, you'll be able to come into the market, spend at least 5, 10, 15 minutes, and by the end of that, you will have traded your setup and you will leave the market with profits 95% of the time. There are going to be days where you lose, but it's not even days. There are going to be moments or trading sessions in a day where you lose, but they're going to be few and far between. So there's going to be 2 powerful concepts that I'll reveal in this course as you go along. And there's going to be a no-nonsense approach. It's going to be a step-by-step guide, as I say, that you're going to be taking and using in every single trading session to find setups, to enter trades, and there is a set of rules that you will have to follow in terms of exiting the trades. There's going to be you need a general, as I say, you need a general trading knowledge, at least some kind of trading knowledge, before you enter into this course. Because I'm not going to explain how to use MT4, how to open it, how to set up your indicators. It's just going to require you to have some kind of knowledge so that the information in this course goes in to your mind much easier than it usually would when you are starting off from the beginning. So take some time. If you haven't learned a little bit about trading, take some time to learn about the platform. Take some time to understand what candlesticks are. Take some time to know how to execute trades, because I'm not going to explain that. As I say, this is a no-nonsense approach to the market. And then at the end of this course, there's going to be a bonus tool that I will release and that you can download that will accelerate your learning curve. But enough about that. Let's move on to the next video. I think I finished doing the overview of the course. Welcome to the next video in this course. Here I will highlight how to use this course. I need you to pay close attention to everything that I say. Every single thing that I want to reveal to you in this course is going to be very important. Take the time to pause, take screenshots, and also take notes of everything that I say. Yes, you're going to always have access to this course, but it's going to help in situations where you're about to take trading setups where you're going to need your notes. And that's when you're going to be able to refer to your notes and follow the steps that I will outline in this course that I hope that you're going to take notes on. And another important thing, watch every video in chronological order. Please, I'm begging you, take every single video as it comes and do not skip. Do not try to invent the wheel, to reinvent the wheel too. Everything that I highlight in this course and the step-by-step method works, and you will see as I give you examples along this course. Please take your time, understand every single thing in this course step by step. As much as I'm giving you a step-by-step method on how to approach the markets, you also have to follow the course step by step. Do not miss a single point in this course. So we're going to move on to the next lecture, and I will share one more thing, or at least two more things before we get into it. So yes, this is it, and we'll talk in the next lecture. Welcome to the next lecture. In this lecture, I'll explain the differences between Forex and indices, as you can see on the slide. So there's a big difference in spreads between Forex and indices. In Forex, usually the spreads average between 1 pip to something like 5 pips, for instance, for at least the major Forex pairs. But in indices, the spread is much larger. It goes up to 20 pips, 30 pips, something like that. And the next thing I want to highlight is the speed of profits. To make pips in Forex, it takes some time. For instance, let me give you an example. If in Forex, when you're trying to trade, let's just say Euro USD, and your aim is to make 50 pips on a normal trading session without having any fundamental news coming into the picture, it'll take you a few hours or maybe 30 minutes plus to get to a point where you reach the 50 pip mark. But in indices, you can make 50 pips within 2 or 3 minutes, depending on the time that you're trading at. But in most cases, specifically with Nasdaq and US30, you can catch 50 pips within 2 or 3 minutes, or 2 or 3 1-minute candles, as you will see later on in this course. The account balance. The account balance on Forex, you can trade with an account that has $10 and still be profitable and grow it drastically depending on what strategy that you have. But in indices, you need an account size that's a bit bigger than the one that you'd usually use with Forex. For instance, with Nasdaq, as far as I'm concerned, with Nasdaq, you need an account size of at least $40 before you can trade an account with 0.01. Scalping, day trading, and swing trading differences. You can scalp in Forex, you can scalp in indices. But if you scalp in Forex, let's say you hold a trade for 5 minutes, you will not make so many pips. You can probably make 5 to 10 pips if you scalp Forex. But in indices, the strategy that I'll teach you, when you scalp in the indices, you'll be able to make at least 100 pips plus through every single trade that you execute, and this is just by holding the trade for a few candles. Day trading. Next is day trading. With day trading in Forex, of course, you can make 50 pips, and this could take you a good 45 minutes. But if you day trade indices, you will make a few hundred pips, and obviously the accounts will grow much quicker, as I highlighted here in the account balance. Swing trading now. In Forex, if you swing trade, for instance, Euro USD, and you hold the trade for a few days, the average, just from my rough estimate, the average amount of pips that you can gain from trading Euro USD and swinging it can probably be something like 150 pips after 3 days. I'm just using Euro USD as an example, but if you do trade and swing trade indices, you will definitely make a few thousand pips. And another thing that I haven't highlighted here is the difference. The thing that I haven't highlighted here is the fact that with indices, you need to be very precise with your entries. The thing that I haven't highlighted here is that in indices, you need to be very specific and precise with where you enter into the market. Because if the market pulls back in a drastic way, it'll cancel out your trades and you will blow your account. It's much easier to blow your account through trading indices than in trading Forex. Fundamental news events. In Forex, there's all kinds of 3 bull news events. If you don't understand 3 bull, it basically means high intensity news events that move the market in a sharp direction, in up or down. And in these news events, you probably make 50 pips plus. But in indices, in a news event, for instance, the New York Stock Exchange Open that happens at 3:30 South African Standard Time, you can make a great number, an extreme amount of pips. For instance, you can make a good I don't know, 300 pips from the first few candles. And then the peak times to trade. On Forex, there's not really a peak time to trade, but in indices, specifically Nasdaq 100 and US30, you will see through this course that you'll be able to trade 5 times in a day. And I'll highlight that as soon as we get into the nitty-gritty of the course. So I think I've highlighted everything that I've needed to highlight in this slide when it comes to the difference between Forex and indices. So I'm going to catch you out in the next lecture.